Mr. Shiv Chanani, Senior Fund Manager, Equity, Baroda BNP Paribas Mutual Fund. Hi Shiv, a very good afternoon and thank you so much for your time. Firstly, your take on the markets. How are markets expected to react in the medium term? Are you witnessing any growth triggers? And believe that in the medium to long term, you too are bullish on Indian markets.
Hi, good afternoon, and thanks for having me here. Uh, very interestingly, in the morning, I came across a quote which said that there are decades when nothing happens, and then there are weeks when decades happen. So, if we go by what's happened in the last couple of weeks, probably that resonates very well. And yet, if we look at for the full calendar year, current year, one may see and say that, look, nothing really happened in the last 5 months. So that's the kind of situation where we are, where, a lot of things happened in the last 5 months, yet it looks like, from a market perspective, looks like nothing happened. So yeah, I think that's where we are from a trajectory perspective. But what's really happened in the last maybe 4 or 5 months, and more importantly, I think last 2 to 3 weeks, is that things have become a lot more determinate as compared to the uncertainty that we had. So if you think about from the last maybe 2 3 weeks before, we were all thinking, oh, we don't know what's going to happen with the US, how big the slowdown can be. We don't know what's going to happen with China. That's going to suffer a lot. Hence, we don't know what's going to happen with the global growth, so on and so forth. Uh, I think as we stand today, I think a lot of those variables, number one, they don't look as bad as probably they were looking earlier. Uh, Yet it doesn't mean that we will not go through some kind of a pain. We will probably go through that pain, but as I said, it's a little more determinate, and hence the uncertainties are relatively less at this point of time compared to, let's say, where they were maybe 2 3 months ago. So in that sense, I think in the short term, yes, the uncertainty is lower. Yet, I think we will have some kind of a growth slowdown globally, and probably to some extent even in India in the next 3 to 6 months kind of a time frame. And then, as usual, they say it's always a story of two halves. Uh, what we saw in the last year, where first half was great and second half was not so great, maybe we will see the reverse this year, where first half may not be that great, but the second half is pretty good and strong.
Hi, Shiv. This is Kanishka also joining in. A very good afternoon. Now, like you just said, that the uncertainty is slightly lower at this point, but then there could still be a growth slowdown. So I want to understand from you, in the past couple of days, we have been swinging between red and green in the past few sessions. So what would you suggest to the investors who are looking for, to place short-term bets, and for those who are looking at, long-term opportunities? Any specific pockets that you're, bullish on?
So I think short term 3 to 6 months is clearly so-called out of syllabus for me. So we don't really think from a 3 to 6 months perspective when we are talking about the equity market in particular. But as I said, yes, probably the volatility will be much lower compared to what it was. But yeah, there will be a bit of a slowdown from a macro perspective. From a medium-term perspective, obviously, we are all very constructive on the market. And what we have always been saying that, look, in terms of the market returns, uh, India as a economy should deliver, let's say, anywhere between 10 to 11% kind of a nominal GDP growth, at least for the foreseeable future. And there is no reason why the underlying market should not deliver returns, which are at least similar or maybe a tad better than the overall GDP, nominal GDP growth for the country.
but the other news that everybody is tracking on is the tariff related impact. Well, of course, when the news started hitting us, we have seen all these export related companies underperforming. They were actually getting sold off. But now, if the tariff tantrum is with respect to that, if the worst is behind, do you believe it's once again to look at some of the pockets which are export oriented and wherein there is a chance for investors to earn some money?
So look, from a tariff perspective, I think what we have mentioned earlier as well is that if you think from a first order impact, India was never very impacted because we have a very limited exports to the US and much less in terms of when we talk about engineering and things like that. That's just around, I think, 45 billion dollars of number. So that was never a big overhang for the uh, economy like India at any point of time. I think what we saw was a second order impact where we said that because all of those things, maybe there is going to be a slowdown in the US and hence you are going to see, a lot of export oriented companies impacted because of the demand slowdown there rather than the Indian exports being uncompetitive. And as I said, it's not that the slowdown is not going to be there, but probably it's becoming a little more determinate. Eh, Maybe till 1 month ago, we didn't know what is going to be the degree of that slowdown. Right now, we have a little more confidence that, okay, it's not going to be as bad. Probably you will have a couple of quarters of slowdown even in the US, and things will probably come back to normal post that. And I think that's where one can be a little more constructive on the exports from that point of view. But yes, as I said, you will still not need to go through that bit of a slowdown in the next 2 quarters.
Right, Shiv. Like you said, there could be a slowdown in the US in the coming 2-3 quarters. Do you see a trickle down effect of that on India as well? And if so, are there any particular sectors that you would like to avoid at this point, given the key risks that you are seeing?
Sure. So, again, what we have been maintaining is that at this point of time, we are a little more constructive on the domestic demand-oriented sectors compared to the external sectors. So, and we know that, with the monsoons coming and the benefits of the lower taxation coming through the most part of this year, we should see an uptick on the discretionary consumption pie. And of course, you have certain steady growth sectors like the healthcare, which should continue to do well. And, like you have been highlighting just before this particular piece about a couple of capital goods companies talking about a pretty decent sort of a order book. So even in capital goods sector, we will have, it's probably going to be a little more bottom up approach on the capital goods side where we will need to, pick certain stocks or companies which will do pretty well over this year.
I think the whole FII come back because for the past 2 months at least, and in this month to date as well, there have been buyers in the cash market. But with this China once again looking attractive to select investors is what we are reading in the reports because of the fact that the US-China deal has been announced. Do you believe that there could be a change in stance in the FII view with respect to India?
So I think, this whole concept of India versus China has been long standing as to how the foreign investors are looking at it. And I think the FII investors had several takes at China in the last maybe 3-4 years, where they have thought that, okay, China is a great market, valuations are great, let me get there. And of course, in 6 to 9 month time frame, they find that things are little different from what probably they thought. Whereas if you look at India, I think the key selling point for the India or Indian market as an investment destination has been that you get a steady growth in this market. I think that is a promise which remains fairly intact. And we believe that, this is something that will probably continue to attract, flows at different point of times. The last point being that, very often it's been talked about that the valuations for India are very expensive. Uh, and I think that variable for, let's say, the range bound market that we have seen in the last maybe 6 to 9 months, I think that particular variable is also getting addressed, where at least the headline valuations are probably in line or lower than the historical numbers that we have seen for the Indian market.
With this, we let you go on that. Thank you so much for taking the time out and speaking with us this afternoon.
If you like this video, then like, share and subscribe to ET Now.